And good evening, everyone. Time for another silver update. Kind of an interesting day today. Had a pretty violent smackdown at the open. Got down to 30.30. Rallied right back up. We've seen a number of those. They seem to happen normally at the New York Open, and when we see them bounce back real quick, we normally go into new highs, or fairly soon we go into new highs. I've drawn a number of lines here, some of which you'll recognize. This is the pennant that I drew before, predicting that we would break out to the upside, which we did. I didn't draw the other little pennant here because it's too small. We did break out of it, but we broke out of it not very strongly, and we fell back. That's today. This trend line is the most recent trend line I've drawn. Seems to indicate the current trend we're on. This is an old trend line that we fell through here, broke up above, and then fell through again. So this trend line seems to have failed. And I also drew a support line here. This support line's roughly at 30.50, and it's not the strongest support line, but it seems to indicate the point at where we break out into new territory, showing where the market wants to run. We seem to be holding fairly firmly above it. We might be shaping up tonight for a move, possibly try to make a run up here at new highs. It will be interesting. I think we are going to see new highs this time around, and I'm very curious to see how strong of a move we make when we go to those highs. If we see something like a $1 to $2 run out of those, that would be very strong. If we pop out maybe 50 cents and come back, then it might be a fake out. So we'll just have to wait and see. I think we're going to see within the next 2 or 3 days a determination of if we're going to make a run past this 31.20, and possibly even tonight. I wanted to look at a couple of articles, actually a number of articles. They're all on Zero Hedge, and this is one that just came out tonight. It's from Jeff Clark. How much more demand can silver handle? I think the answer is not much, but it's interesting here. He says the numbers for silver demand are starting to make some market watchers nervous. The U.S. Mint sold 6.4 million Silver Eagles in January, more than any other month since the coin's introduction in 1986. China's net imports of silver quadrupled in 2010 to 122.6 million ounces, roughly 13.7% of global production. Meanwhile, mine production can't meet worldwide demand. The only way demand gets fulfilled is from scrap supply. That's some very hungry demand, which raises the question, how long can this pace continue? This is important for various reasons, starting with how demand contributes to price. If demand falls off, our investments could too. I don't see demand falling off anytime soon, but we'll see a little bit lower. I think he makes some pretty bogus conclusions. While I've discussed the concern regarding a lack of supply before, which is its own implications for the silver market, let's focus on investment demand. Frankly, is there room for it to continue to grow? After all, how long can investors continue to set records? There are a number of ways to measure this. The amount of money available to invest, its percent of total financial assets, its contrast to demand in the last bull market. I think the bottom line answering the question is compare the biggest silver investments to some popular equities as they rival out of stocks, blah, 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 blah. So he goes down here and he analyzes the silver ETF. The largest silver ETF, iShares Silver Trust, has net assets of $9.6 billion as of February 4th. This pales in comparison to more popular stocks. In fact, the SLV has roughly 3% of the market cap of Apple. Have to grow 43 times to match ExxonMobil. Well, that's all fine and good, except for the fact that the SLV isn't silver. So his whole premise is flawed. Now he's going to come down and argue that there's plenty of room for demand to grow, but I mean it totally overstates the case. The case or understates the case. The case is much, much worse. There's no silver in that SLV, or there's very little. Let's look at the real purchasing. The 6.4 million ounces of silver. We know that the amount investment demand is roughly, I don't know, 50, 60 million, something like that a year. They mine 700 to 800 million. There's a 200 million deficit, and that's the drawdown. That's yearly, and we don't know how much is left in stockpiles. That's all kind of a mystery. But anyway, this is so we're looking at 50 to 60 million is the real investment, not this phony baloney $9.6 billion in the SLV, which JP Morgan has diverted from silver. This isn't money invested in silver. This is money diverted from investment in silver. Some of these people are so ignorant, it astounds me. Anyway, so here's your real demand of 6.4, which is it's not going to continue at that pace, but if it did, it would be 6.4 times 12, roughly 80 million. So say it's 80 million times 30, that's 8 billion. Say 20 something billion, or is that, let's see if I have my figures right, 40 million, 400 million. No, it's not anywhere near that much. 50 million ounces of silver is only $1.5 billion. Now, if we take all of the investment grade bullion, let's say we take all the coins and all the mints and everything, maybe we get 100 million. That's still $3 billion. So he's understated the case drastically. It's much more explosive than what he said. But even his argument here shows how ridiculously low the amount of money that goes into silver is compared to these other investments. So silver is set to explode by any analysis. So I'll link that. Go ahead, check that article out. Another article I wanted to point out is on Zero Hedge as well. This is about how to fake an economic recovery, and it's a pretty good article. It's by Giordano Bruno, and he's pretty much destroying the government's arguments for recovery, which we pretty much know are lies. There's some things, he goes through all the statistical arguments, the inflation, the GDP, and all the fake numbers the government puts out. But it's not that difficult to figure out what the state of the recovery really is, because all you have to do is just look at tax revenues. That's going to tell you the state of unemployment. It's going to tell you the state of income. It's going to tell you the state of a lot of things. And that brings us to our next article, which is about this recent Obama budget that came out. And this is a good one. Obama's budget is a fantastic comedy. And he does a little breakdown here of Obama's budget, and it is ridiculous. I mean, the lies or just the absurd yarns that these people spin is mind-boggling. Just look at some of the numbers here. These are the projected revenues for 2011. They're projecting 2.17. For 2012, 2.62. A $500 billion increase in 1 year. Next year, there's another 400 billion. 3.33 the next year, and 3. They are projecting, here it is, a 65% increase in revenues in just 4 years, which would be, he goes in and analyzes, you can be the 4 greatest years of economic growth and low inflation in the history of the country. It's absurd. I think that Obama is, I think they know that probably a double dip is coming or something, and they're just going to lie so ridiculously. They know that it's going to be broken by some crisis, so they figure, why not just completely fabricate everything? Now look at the projected deficit here. They project the deficit is 1.6 trillion this year, falls to 1 trillion, falls to 768 billion, then 645 billion, then 607 billion. So they project the deficit falling. The spending they project to go from 3.8 trillion, 3.7 trillion, 3.7 trillion, 3.9 trillion, and then 4 trillion. So they don't really project many cuts on there, but and so they end up with the deficit, a percentage of GDP down to 3.2%. So basically they say that GDP is going to go through the roof, inflation is going to be non-existent, and government coffers are going to fill. It's just, I'll link the article, you can go and look at it. The Obama budget is the most ridiculous budget I've ever seen in my life. I've seen a lot of budgets, but this one is a joke. And that brings me to my last article, which is Matt Taibbi, the guy who came out and did the article in Rolling Stone on the vampire squid, Goldman Sachs. He does an excellent article here that Tyler covers. Why isn't Wall Street in jail? And he just goes through the laughable nature of what these bankers have gotten away with, and the fact that none of them have gone to jail when they've committed the most heinous financial crimes that anyone has seen in their lifetime. And he mentions Madoff goes to jail, and then he begins to list off these regulatory agencies. We've got let's see, the SEC, we've got the Federal Reserve, we've got the FDIC, we've got the CFTC, we've got the Comptroller of the Currency, New York Stock Exchange. Now, the reason I brought this up, this would be my suggestion. Why don't we just eliminate these agencies completely? Obviously, I like this term they use, they're captured. They say I say captured. What is that? Some kind of euphemism? These people are completely corrupt. They should all be in jail. But, I mean, there's some money we can save on the budget. Let's eliminate the SEC. Let's eliminate the CFTC. Let's eliminate all of these regulatory agencies because they don't do anything. They're completely corrupt. I don't know how much that would save us, but that's a start. So go ahead and read that article. Matt is one of the few reporters out there that has the guts to stand up and tell the truth about what criminals we have running Wall Street and the banks and the government, and he just lays it on the line. So great article. So I'm going to link all those, and if you get a chance, read them. We're watching tonight, we're at 30.7, and we look fairly strong, although we're slackening off. We are not following the same strength that we were seeing in these pennant breakouts. It does seem to be weakening, and that's why I think they tried a concerted attack. I did want to start using the volume chart because a lot of these volume indicators are really key with the technicals. I'm not sure if these are contract volumes, numbers of contracts. I have a hard time believing that this is 500,000 contracts. If anybody knows, post a comment on there. I'm not sure if these are 5,000 ounce per one contract, or if these are maybe 1,000 ounces, or what these are. But anyway, it does give you the raw volume. Volume is an absolute key to determining technical information. You can see we sold off an enormous volume on this downdraft, and we got sold again there. It wasn't until we had big volume come in at this base that we started to rally, and we will look for big volume. If this should have shown big volume if this was a top on a sell-off and then a failure, and we're not seeing that. This appears to be support volume, so I'll start adding volume analysis to some of my charts because I really feel it's first or second most important piece of technical information. And we'll see what we do tonight. Talk to you next time.